Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Fullerton Short-Term Interest Rate Fund. This video is done as a follow-up request from a viewer's comment in my previous video covering the Fullerton Sing Dollar Cash Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. The Fullerton Short-Term Interest Rate Fund is one of the 3 Sing Dollar flagship product offerings from Fullerton Fund Management, with the other two being Fullerton Sing Dollar Cash Fund and Fullerton Sing Dollar Income Fund. They have slightly different return and risk profiles and therefore are suitable for different investor requirements. All three funds are popular in the Singapore retail investor space, and many distributors offer at least one of them in their funds list. Fullerton Short-Term Interest Rate Fund sits in between the other two funds in terms of returns and risk expectations. Let's find out more about this fund in this video. Fullerton Fund Management is a Singapore-based asset management company created in 2003 by Temasek Holdings, a Singapore state-owned multinational investment firm. In 2017, Fullerton formed a strategic partnership with NTUC Income, Singapore's leading insurance company, whereby Fullerton would become the investment manager of a sizable part of NTUC Income's assets. In exchange, NTUC Income would own a significant minority stake in Fullerton. As per my understanding back then, Temasek would retain 51% ownership while NTUC Income would take 49%. I'm not sure if this has changed since then. Temasek established Siviora Group in 2020, which is a wholly owned subsidiary that houses all the asset management businesses including Fullerton. Among them, Fullerton is the only one that focuses primarily on active mutual fund solutions, while the rest are more alternatives and private markets focused. The importance of explaining this relationship is that Fullerton as a fund provider has probably the most solid backing you will find in the industry, with a sovereign wealth fund and a leading insurance firm in the country as its parents. The likelihood of Fullerton failing and closing shop is near impossible, because if that ever happens, there are bigger things to worry about in Singapore. Given the nature of the setup, Fullerton doesn't publicly disclose its financials and breakdowns of the assets under management. What we do know from public news is that Fullerton's AUM grew from about 17 billion Sing dollars to 40 billion Sing dollars when the strategic partnership with NTUC Income was announced in 2017. While this is sizable in local context, it is considered relatively small compared to the bigger global fund providers in the retail space. We can get a glimpse of Fullerton's product offering capabilities through the fund range filters in its website. Majority of the funds are registered in Singapore, indicating its primary customer base is Singapore investors, as you would expect from a state-owned Singapore-based fund provider. The Luxembourg registration would cater for UCITS funds for European and global investors, while the other country-specific registrations are probably more for specific client needs. Asset class-wise, Fullerton's offerings are mainly fixed income, suggesting this is where their strongest investment capabilities are, but also inevitably so for a fund provider that needs to support an insurance company parent. Equity solutions are few, though this is where Fullerton needs to grow to be a more diversified fund provider. Multi-asset is the natural progression by combining fixed income and equity capabilities. Cash-like solutions are few, as there is not much variety you can come up with in this category. The markets filter also shows Fullerton's offerings are primarily Asia and Singapore focused to cater for local and regional demand. There are also a handful of restricted funds that seem to be mostly hedge fund and alternative strategies that I assume are also small parts of the overall business. In summary, Fullerton's main capabilities are in Asia and Singapore fixed income and cash solutions, which is where this fund in this video falls under. While there is no mention of fund managers in the fact sheet, the intro video in the featured fund page highlights Melvin Lee, who is the co-head of Sing Dollar Fixed Income Solutions in Fullerton. According to Morningstar, Melvin joined Fullerton in 2006 and became the fund manager of the Fullerton Short-Term Interest Rate Fund since its inception in 2007. Melvin is also the fund manager for the Fullerton Sing Dollar Income Fund. There is unfortunately no public information on the rest of the team supporting Melvin. As the sole fund manager, there is obviously key man risk here. Though, we can take some comfort that there has been historically little movement in the managers in Fullerton, so it seems they are generally quite happy staying in the firm and specializing in their respective investment solutions. The Fullerton Short-Term Interest Rate Fund is a sub-fund under the Fullerton Fund family. This fund family is set up as a Singapore-constituted umbrella unit trust. The fund is registered in Singapore as a MAS authorized scheme, which means it is suitable for retail investors. Fullerton has a habit of not providing too much details on its funds. The Fullerton Short-Term Interest Rate Fund provides 2 short paragraphs in its spec sheet covering the fund objective and investment approach. From here, we can gather that the fund mainly invests in both bonds with up to 5 years of maturity and with no industry or sector preference, and as well money market instruments. Despite it not stated as a fact, this is a Sing Dollar focused fund. Therefore, all foreign currency exposures are fully hedged back to Sing dollars to avoid FX risk, with a 5% frictional currency limit. The objective indicates the fund aims to achieve medium-term capital appreciation. While there is no explanation on what medium-term refers to, we generally can take it to mean around 3 to 5 years period. The capital appreciation part is important, as this means generating income is not a key objective. The feature fund page provides a much better worded paragraph explaining what the fund does, although the key points are broadly the same. The last part states the fund is intended to provide stable, steady returns, meaning we should expect the volatility of the fund to be low. The prospectus provides just a little bit more information by stating clearly that the non-Sing dollar bonds in the portfolio needs to be investment-grade credit rating. Why this is not stated for Sing dollar bonds is because many bonds in the Sing dollar market are issued without an official credit rating, as the bond issue size is small and the intended investors' universe is limited. Therefore, mutual funds like the Fullerton Short-Term Interest Rate Fund tends to have its own internal process to assess the quality of Sing dollar bonds and invest in those that they deem to be lower risk or similar to investment-grade quality. The prospectus also provides a long section on the fund benchmark, which is the 3-month Singapore Overnight Rate Average, or SORA, plus 0.6%. This benchmark is for performance comparison purpose, meaning the fund aims to deliver better returns than the benchmark. However, the fund is not constrained by the benchmark for its portfolio construction. This benchmark is established in August 2023, replacing the previous benchmark, that is the 3-month Singapore Interbank Bid Rate, or CBIT. This benchmark change is regulatory mandated as a result of the transition from LIBOR to SOFR globally, and SIBOR and CBIT to SORA for Sing dollars, so it is not something that the fund changed for its own benefits. SORA data is available in the MAS website that allows people to download the daily data points easily. Another easily available source is the mortgage websites of the local banks, given that 3-month SORA is commonly used as a base for mortgage loan borrowing rates. Here, we can see the 3-month SORA has been moving down from 3.034% in January 2025 to about 2.358% in May 2025, in alignment with interest rate decline trends globally. Using this as a reference, it means that the Fullerton Short-Term Interest Rate Fund ideally should currently provide a return that is at least 2.358% plus 0.6% equals to 2.958% per annum or better. There are no further details on the fund's investment process available to the general public, which is unfortunate as I think it would be useful if Fullerton can provide more information for a fund like this that local retail investors have interest in. The Fullerton Short-Term Interest Rate Fund has an AUM of over 960 million Sing dollars, which is a decent size given its Sing dollar focused strategy. The fund is base currency in Sing dollars, and as previously mentioned, all non-Sing dollar exposures are hedged to Sing dollars to minimize FX risk. While the portfolio average credit rating is A, the rating breakdown shows about 62% of the portfolio in BBB rated bond exposures. This is presumably because the manager is trying to generate the highest yield by overweighting BBB bonds, but at the same time trying to keep average credit rating at A, which is done by having about 10% exposure in AAA Singapore government or government-affiliated bonds. The current 3.7% average coupon and 3.4% yield to worst shows that the portfolio is positioned to generate enough yield to meet the 3-month SORA plus 0.6% target return. The current average duration is 2.1 years. The fund does actively adjust duration in the portfolio in accordance to macro views, which is often mentioned in the commentary section of the fact sheet. The fund currently has 139 holdings in the portfolio. The geographical breakdown shows about 1/3 are Singapore exposure, while the rest are mainly Asia exposures. Perhaps Asia credits currently offer better returns than US or Europe credits for short-dated bonds. Top 5 holdings don't really disclose much, except there seems to be a soft cap of non-sovereign individual credits at around 2% levels. The annual and semi-annual reports of the fund do provide full listing of the portfolio holdings, though somewhat dated. We can gather from there that the fund portfolio is quite actively adjusted over time. For example, about a year ago, the portfolio had much higher weights in China and Singapore exposures. For a pretty straightforward solution, the Fullerton Short-Term Interest Rate Fund comes with quite a number of share classes. A class is the oldest share class incepted in 2004. It has a really low management fee at 0.1%, but is already soft closed for many years. What this means is that the fund doesn't accept new investors. But if you were an early investor into the fund and had bought this share class, Fullerton allows existing investors to continue subscribing to this share class with a minimum of 100,000 Sing dollars per order. Given the soft close status, you will not find this share class offered by distributors. B class is the institutional share class that has a 0.2% management fee and requires a minimum holding of 1 million Sing dollars. B1 class is kind of the replacement for A class and was launched in 2009. It has a 0.35% management fee, as Fullerton probably figured out they need to charge more for an actively managed fund. C class, also incepted in 2009, is the most common share class offered by distributors, because it does not have any minimum transaction requirements, making it suitable for retail investors. It also has a higher management fee than the B1 class at 0.5%, so distributors can potentially get a bit more trailer fees offering the C class. C1 class is the same as C class, except it has a quarterly distribution payout. Given the nature of the fund strategy, the distributions can be very low at times, especially during low interest rate environments. Therefore, it is less attractive to investors, and as a result, most distributors don't bother offering the C1 share class. I will be using the C class for performance comparisons later. The fund does have currency hedge share classes for non-Sing dollar based investors. In this case, D and D1 classes represent the US dollar hedge equivalents of C and C1 classes. These are also not popular, as US dollar based investors have a lot more choices when it comes to short duration bond funds. There is also a D2 Aussie hedge class, although it appears to be an inactive share class. Lastly, the R and R1 classes are created for select distributors only. They probably come with unique fee arrangements between Fullerton and the distributors, which I won't have access to the info. However, if your distributor happen to have these share classes and if you can meet the subscription requirements, they are definitely better than the C class because the management fees are lower. Other expenses for the fund is around 0.05%, so you can add that to the respective management fees to get the TER of each share class. The fund allows up to 3% subscription fee to be charged by distributors. However, given the low return nature of the fund, I suggest to bargain it down to 0% if possible. The Fullerton Short-Term Interest Rate Fund boasts a spectacular long-term outperformance versus the benchmark since inception in 2004. However, we need to understand that the benchmark, which is 3-month SORA and previously 3-month CBIT, is more like returns of 3-month fixed deposits. Hence, the returns are lower but very stable and have no negative returns. The fund, on the other hand, invests in short-term bonds, which is naturally a higher return asset class than fixed deposits, but at the same time comes with higher volatility and risk of negative returns as well, as seen in 2008 and 2021. Here are the calendar year returns that shows 19 positive years out of 21, which is a pretty decent track record in any case. But let's see how the fund compares against other popular Sing Dollar focused bond funds in the market. Let's first compare the fund with the other two Sing Dollar flagship products from Fullerton. In this 10-year chart, Fullerton short-term interest rate is actually the best performer. Fullerton Sing Dollar Income, being a more aggressive portfolio, suffered too much losses in 2021 to 2022 due to the rapid interest rate hike environment and also due to a poor Asian bond market situation, in particular with China bond issues. We can see it has been recovering though, and should overtake Fullerton's short-term interest rate again soon, assuming no new market disturbance. Fullerton Sing Dollar Cash, being the most defensive portfolio, has naturally lower returns, but also doesn't get negatively impacted in 2021, given it is mainly invested in fixed deposits. If we zoom in to past 2-year chart, it again shows Fullerton short-term interest rate providing an experience in between the other two funds, having generally much lower volatility than Fullerton Sing Dollar Income, and at the same time trying to generate slightly better returns than the fixed deposit focused Fullerton Sing Dollar Cash. In fact, purely based on this 2-year chart, I might be more keen to consider the Fullerton Sing Dollar Cash Fund instead if I am particular with capital preservation. Here are some of the Singapore fixed income focused funds in the market. As seen, they tend to be much more volatile than Fullerton's short-term interest rate fund, and therefore are probably more appropriate to be used as peer comparisons for the Fullerton Sing Dollar Income Fund instead. Here are 3 funds that are more relevant to be used for peer comparisons, as their strategies focus more on shorter duration bonds. In this 10-year chart, Fullerton has the lowest cumulative returns, and we can see this is mainly due to a bigger correction in 2021. Lion Global is the best performer though it has exhibited slightly higher volatility than the rest. Zooming in close to past 2-year chart, the 4 funds are pretty similar in performance, with Lion Global just slightly ahead and United slightly weaker. Now the performance differences isn't that great enough to pick a clear winner. You might want to choose Lion Global Short Duration Bond Fund for its slightly higher returns track record, or you might want to choose United Sing Dollar Fund for its much larger AUM at over 2 billion Sing dollars. Or you might want to give Fullerton Short-Term Interest Rate Fund a chance to show it has improved after the 2021 correction. Personally though, I would prefer going for Fullerton Sing Dollar Cash Fund at this time, considering I am missing out a little bit of returns in exchange for much higher certainty of capital preservation. Of course, if higher returns is what is needed, we probably should consider other bond categories or asset classes instead. Finally, let's summarize our findings. With Temasek and NTUC Income as parents, Fullerton enjoys high stability in its business, which is good for investors. As a local asset management business set up by Temasek, Sing Dollar fixed income and cash management is Fullerton's forte, so the Fullerton Short-Term Interest Rate Fund is a product where Fullerton has the best expertise in. There is little information on the fund manager Melvin. and no details on the team supporting him. It would be good if Fullerton can cover this a bit more for investors to understand the people behind the product. While the investment strategy appears simple enough, there is hardly any details elaborating on how the macro views impact the portfolio or how the bond selection process works. It would be good if Fullerton can provide more information in this area. Investors should note and understand that the benchmark is effectively a fixed deposit-like return, while the fund is a short-duration bond portfolio. Therefore, in normal circumstances, the fund should comfortably outperform the benchmark, and during market stress, the fund can generate negative returns while the benchmark won't. I don't think the fund is at fault on this though, as there is probably no ideal index available to use for this fund strategy, but investors should know the differences. The fund highlights a long-term track record of 19 positive years out of 21, which is good. However, the negative return in 2021 looks slightly worse than peers, leading to a slightly weaker overall performance in recent years. Hopefully the team has enhanced their risk management processes to reduce the likelihood of such underperformance going forward. In conclusion, except for 2021, the Fullerton Short-Term Interest Rate Fund presents itself as a solution that delivers a very close performance compared to the rest in the peer group, so it doesn't stand out as a clear winner or loser. All the funds in the peer group are able to generate long-term returns that are comfortably above prevailing fixed deposit rates. Lastly, as shown in the last performance chart, investors who are more concerned with capital preservation can consider instead the Fullerton Sing Dollar Cash Fund. This concludes my absolutely biased comments on the Fullerton Short-Term Interest Rate Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.